Yes, madam.
Yeah. Good morning, all of you. Thanks to Venu for allotting me this topic, because I was, completely this topic was new to me till I started preparation for this presentation. So with great gratitude, and I'm very much privileged to present on this topic. Good morning to all mentors and seniors present here. So the topic given to me today is GST on self-redevelopment. So we have to understand, there is a case study has been given to me. Basically, that case study is all about a society trying to develop after demolishing with the consent of members. It wants to do the redevelopment process. Redevelopment the apartment, and it is engaging a builder. After completion of the project, it receives the notice from GST department. We are required to analyze the implication of GST on the whatever allegations placed on the developer and the society. So that is the main crux of today's discussion. So before we get into that discussion, I thought we have to understand what the concept is all about, because this concept is, I wouldn't say it's new, maybe it's new to only few of the members. So let us understand in detail for about 15 minutes what is redevelopment, what is self-development, and then we will understand the legal provisions under GST. Later on, we will go deep into the case study and analyze it. Towards the end, I will present my views. After end of the session, the floor is open for all members. Whoever has got any doubts, or if they have different views, they are free to present, because this concept, real estate itself, is that, it is subject to various interpretations, and lot of litigations are pending before various high courts. So it is purely subjective. Though there are circulars, guidelines, everything is issued, but there are diverse opinions. The history of litigations, if you see under this real estate sector, it requires serious understanding. So whatever I am presenting is limited to my opinion and my understanding. So with this note, let me get into the topic of today. First is that, what is redevelopment? We have to understand what is development. What is development? In general terms, development is nothing but owner of the land owns a piece of land, barren land. He goes to the developer. In turn, he exchanges. It's more like a barter system where he gives the land to the developer for development. He enters into an agreement. In turn, the developer gives him the percentage of, whether in the form of revenue sharing or area sharing or whatever may be the agreement. It purely driven by the contract. In exchange, he gives the number of units, constructed areas. So this is what the general understanding of development. We popularly, we call it as a JDA, Joint Development Agreement, because both the landowner and the developer come together for the common purpose. So whatever units that are left extra units that are in the hands of the developer are sold to the buyers, prospective buyers. That means other than the landowner, the extra units are sold to the new buyers. So this is the basic logic behind the development, right? So what is redevelopment? Redevelopment is also more like a development only, but the difference is that there should be a existing land. That means there is an old building or there is a property which is in the dilapidated structure that has to be demolished, and then new construction happens. So it's more similar to development. Only thing is that once the existing building is demolished, it becomes the joint development agreement. That's all. In simple terms, redevelopment is nothing but demolition of the existing building and then getting into the shoes of joint development agreement, for simple understanding.
Madam. Hello.
If anybody has any doubts, free to raise.
Yeah.
Yes, yes.
If it is not demolished and without demolishing, if I construct further on the existing building, would it fit into redevelopment?
See, that's what I will come back to you. In my view, I mean, after long discussion, there is not much of difference between redevelopment and joint development agreement. JDA and it's just a different coloring. Just a different.
Yeah, in a redevelopment, there are multiple owners. In a joint development, generally a single owner.
There also there is a difference. I'll come back to you. I'll come back to that.
Okay, fine.
Okay.
2 points.
Yeah. So what is it? Self-redevelopment. Self-redevelopment is nothing but if you look at the Maharashtra, because this is very popular in Maharashtra and it is gaining momentum in Delhi, Gujarat, and of course even in Bangalore. Because when the building is more than 30, 40, 50-year-old, it is mainly owned by, there are a lot of multi-story building and apartment concept is very well known and popular in the city like Mumbai. So when the apartment becomes older, it becomes purely non-livable, in the sense it becomes very dangerous to live. And of course, it's not only for the residents, even for the neighbors, because of the old structure. Why it happens? Because of the sea is there, and corrosion, erosion, whatever you call it, because of the aging of the building loses its structure. I mean, so it is safe to redevelop that and come out with a new building. So with that intent, in Maharashtra, the concept of resident welfare association is slightly different as compared to Karnataka. There it is called as a society, where all members are the members of, that means the residents of the apartment are only members of the society. The society owns the land. Unlike in Karnataka, here the Resident Welfare Association does not own the land. It does not have the UDS, it does not have anything. It is just a vehicle only to take care of the maintenance of the property. Whereas if you look at Maharashtra, there the concept is completely different, where the land is allotted by the government to the society. The piece of land, the entire piece of land is held by the society. And then the members becomes the owners. Members becomes the, you call it as a long-term lease or whatever is that, just like how we have shares. Each member of the multi-story building becomes they are all become the member of the society. So when the redevelopment is undertaken by the society in the sense, the society undertakes the responsibility of redevelopment, it is called as self-redevelopment. Why we call it as a self-redevelopment is that the concept of mutuality is very well known to all of us. So the member and the society are one and the same. So since the society does on behalf of the members, it is called as a self-redevelopment. Otherwise, the development, self-redevelopment, and joint development agreement all are conceptually more or less the same. Right? Conceptually, the principle behind all this are all the same. It is termed as differently, and depending on the agreement, it is different, but the concept is the same. That's what I want to, place it before even we going to the next slide. So that the understanding becomes easier. Just for making it easy and making it much more clearer, I added this slide after just 5 minutes before. The development is done on, in case of development, the development is done on a barren land. Here in self-redevelopment is done on the demolished barren land. That means the existing building is collapsed and then it is started. The landowner transfers the development right. Here the society transfers the development rights. Here also tripartite agreement. There also tripartite agreement. Only thing is that the developer is engaged in the form of a contractor. Though he is not a contractor, it is not a works contract. He's just engaged in the sense through a tender process, he's involved. And here also RERA is applicable. here also RERA is applicable because there is an intention by the developer to sell it to the external buyers other than the members of the cooperative society. The proportion of units allotted to the landowner is intended for selling to prospective buyers. Here, it is purely meant for members. Over and above that, he sells it to the others also. It is also RREP. Every buyer is an allottee. Here also, here also, that's what I'm coming. That's where I'm coming from. Venu asked this question. In case there are certain in Karnataka, in Maharashtra, it is very popular. In the areas like Dharavi, where there are a lot of slums are there, the government itself encourages the developer to go and acquire certain, slums and then start the rehabilitation, rehabilitation process. In such cases, what happens? The developer goes and acquires the slums, develops it and gives it to the authority. In turn, the authority gives it for free to the slum dwellers. In such case, there is no consideration here. There is no agreement or anything. Over and above that, the developer gets some extra space in the form of FSI, which he can get it out of that in that respective area. Say, for example, 1:1.5 is the the FSI in that area. Over and above that, if he buys any TDRs from somewhere, if he has any TDRs, he can, he can load on that area. Over and above that, he can even build 20 floors adjacent to that, what was allotted to the slum dwellers. In such cases, he gets extra space. That also falls under the development process or redevelopment or self-redevelopment, whatever you call it, but the concept is the same. So here, when it is done, so like, the doubt comes here is that since the slum dwellers do not contribute anything for acquiring that, new apartment, whether are they qualified to be called as an allottee? The answer is yes. They also have every right, just like any other buyer, because of that simple concept that there is a deemed value. Once that, irrespective of whether you give it for free or you give it for whatever market value, lesser value, since the deemed value concept comes into place, the allottee also, that the buyer or slum dwellers also gets the same status of an allottee in the just like the RERA project. So why is it self-redevelopment? The concept itself, why it emerged, means prior to the redevelopment, like, when the sector was slightly unorganized, this came into place only from 2009. Prior to that, what was happening? The apartments were getting older. First thing is that not many members were coming together. Some of them, just like any other apartment, when there are 100, 200, 500 apartments are there, there was no majority, but still, because of the condition of the apartment, they were going ahead with the redevelopment. Some of the members were not in line with the, progressing towards the new apartment construction. So there are a lot of issues. And there were no transparency in the tender process. The board were deciding on its own behalf, whomever they wish, they were appointing the developers, choosing the developers. They were not following the cooperative societies bylaws in terms of selection of developer or consideration, whatever. There were a lot of, violations and lapses in the following procedures. And there was no uniformity in the agreement, in the sense, when the project should be completed, when it has to be handed over, there was no uniformity. Because of this, many residents started approaching the court. Because of mounting litigations in the court, the Bombay High Court decided, going forward, only way to regularize this is to bring in some kind of a, involving the authorities. Who are all the authorities? The three authorities are to be involved. One is that Maharashtra Cooperative Societies, like, Maharashtra Cooperative Societies Act, through them, there should be some authority. And town planning, how we have in our Karnataka, same way the town planning authority also should be involved. There in Karnataka, there in Maharashtra, we call it as a Mahada, Maharashtra, Housing Area Development Authority. they also should get involved. So it directed the Maharashtra Cooperative Societies to issue certain directives under Section 79A to regularize this process so that the court need not, engage its time or, involve its time in resolving these kind of disputes so that it becomes an organized activity from the development sector side, real estate sector side. So with that intention, this redevelopment concept itself, gained popularity. So if you look at the present system in Maharashtra, only the registered societies are permitted to follow this process, whatever I'm going to discuss. And the documentation and scrutiny of, the process would be undertaken by the Maharashtra Cooperative Society. And it also says there will be some, and also it gave some directions in the form of Section 79A. There was even single window clearing system, in the sense, once the project is submitted to the authorities, within 3 months, all the approvals will be speeded up. Like, there are various approvals we have to take from, right from, what BWSSB or other authorities, aviation, or there are so many other, town planning, there are so many authorities which we have to take the approvals. All that will be done in a quicker manner in a single window system. And whenever we want to choose the engineer or architect or developer, they will be empaneled, legal advocates. There will be empanelment of professionals in the board itself. So the developer or the society can choose from those empaneled list of professionals. This is one way. Second is the other one is that finance and interest subsidy. Usually the current market rate of interest borrowing cost would be, say, 18%, say 14% or whatever. At 4% lesser price, lesser interest rate, the developer will be given so that he is encouraged to come forward. You have to understand why the developer should come forward for this activity, because this is slightly tougher than the regular development process, joint development process. But still, if you want to promote this activity, because this is for the public interest, if the government wants to do all this, unless and until they give all these facilities, no developer, no known good developer will come forward, because this is going to be beneficial for the residents, the existing residents. So because without paying any money, their standard of living is going to get improved. On top of it, they are going to get some extra space also. For example, 600 units one old resident is holding. Because of this redevelopment process, he is going to get about 30% more, 780 units he will be getting. So what is it going to be the win-win scenario for the developer is that the developer will get, because of FSI, increase in FSI. For example, in 1976, the FSI was, say, about 1.5 or 2. Currently, the FSI can be about 3. In few areas, it is even goes up to 5. Over and above that, if the developer has got the TDRs, he can even develop more. So what is going to gain out of this redevelopment process is that he is going to get the additional units at the market price. He can sell it to the external buyers. So he's not going to make any profit out of from this redeveloping this unit, to the existing members of that society. The gain is going to come only from the selling it to the external buyers, prospective buyers. So that is the only reason why the developers coming forward for entering into these kind of contracts. And also brand building for them. If they say that, yes, they have developed so many, so it's basically brand building. So to promote this, the government is giving interest subsidy and also the RBI's permission to Housing Finance Society, because till 2009, 2019, it was not gaining popularity because the housing finance banking bank NBFCs were not coming forward, or nationalized banks were not coming forward to fund these kind of projects, because it was treated as a commercial, whereas RBI relaxed its norms so that many of the NBFCs and nationalized banks come forward and finance this structure. it is not called as a, though it is a commercial activity, but still they finance these kind of redevelopment process. So with this is gaining momentum and it is becoming popular. This is the basic idea under which the self-redevelopment is, very important. And if you look at it, what are the prerequisites? I'm not going in detail because this is more towards redevelopment. None of us are going to either become builders or, I don't think we have to spend more time on this. So I'll quickly run through. The prerequisite for redevelopment is that the building should be more than this. I'm talking about this only from the Maharashtra's angle. When you want to do the redevelopment, the criteria should be, the building should be more than 25 years old. Okay, then there should be a declaration from the builder that the structure of the building is old and it is in a dilapidated condition. And then property must be in the name of the member society. We call it as a member society just for making it easier. Member society is nothing but the RWA. And it should be compulsorily be part of RERA, because as per RERA, the developer has got the intent to sell to the buyers. And it is more than the, 500 square feet, whatever. It is a multi-storied building. So it fits into the definition of RERA. So the project should also be RERA registered. So these are all the prerequisites. So if you ask me whether for redevelopment, that's what Venu's question was, whether anything to be qualified as a redevelopment, whether these conditions are to be fulfilled, the answer is yes, only if you go through that 79A directives, 79A of that Maharashtra Cooperative Societies directives. That means you are going to the government for, getting it registered and getting the approval, all that, only then it is required. If you are an independent unit, if you don't want to go through that, yes, you don't need to follow these things. You can, it can be an independent activity. Next is that who are the stakeholders involved? Member society, promoter, developer, buyers, members of the society, regulatory authority. As per the Bombay High Court's directions, the regulatory authority should also be part of the entire exercise till the handing over. Okay, so this is what the background of redevelopment. There are various types of redevelopment. If you call it as a self-redevelopment, that's what we discussed. Contract redevelopment means there are certain societies which are not registered under Maharashtra Cooperative Societies Act. Say, for example, 4 or 5, say three-storied building. They were not under the Mahada. So in such cases, what do? They only find some external developer or contractor, and they do that. That is called the contract redevelopment. That is also called as redevelopment only, but it is a contract redevelopment. And cluster redevelopment. Cluster redevelopment in the sense, there are in Mumbai, there are various multi-storied buildings under different cooperatives, under the same cooperative society, say Tower 1, Tower 2, Tower 3. So when they all merge together, the FSI will be more. So when the aging of the towers are more or less the same, they all of them join together and develop it. That is called cluster redevelopment. Redevelopment by federation. There are certain apartments or multi-storied building or societies may not have the adequate resources, in the sense the board members may not be capable enough to lead it. So in such cases, what happens? They approach the federation. When the federation pools the number of societies and then takes it up, takes the lead and completes the project. So that is called redevelopment by federation. So this is the sum and substance of the complete background of redevelopment. This is the flow of events in the redevelopment. I'm not getting into this at all, because when the apartment wants to initiate the redevelopment, one thing we can understand, it has to be done in the special general body meeting. Consent of 51 members or more is mandatory clause, and it has to follow some process, and then it will bring the experts. Everything will be done through the approval of the authority. Once the project is completed, once the project is approved by the authorities, it will be updating the status in the website. So this is the process involved. I'm not getting into the detail how it is done and all that. one thing which we have to understand, I'll skip this. You can read it later. One thing which you necessarily have to, this is something very important. Contractual terms, see how we have joint development agreement. Here also there are certain key terms which we have to understand. They are something called as rental compensation. It means that when the redevelopment happens, there is always a time lag. The existing residents will have to vacate that existing apartment, and they have to move to they have to find another apartment, for their temporary accommodation, temporary stay. So in such cases, the builder, that is the developer, comes forward and gives the compensation. We call it as a it is called as a rental compensation, in the sense he gives it in the form of rental. Assuming I am living in a 600 square feet apartment, till I get the new apartment, I mean, after demolishing my old and then bringing in a new apartment, the developer will be putting me into a similar apartment nearby. I can take it in the form of compensation, or he himself will find me a alternate accommodation. So till this process is completed, I can go and stay there. This is one thing. Second is that there is something corpus fund. The developer gives the corpus fund over and above the new units with the additional FSI. He also gives the corpus fund also to the society. And there is something called as hardship allowance. Hardship allowance in the sense, assuming I have a loan in that property, okay, or I have not paid my maintenance, or I have not paid my property dues. That could be various issues with my present apartment because of my poor financial conditions. Unless and until 2/3 majority comes, the developer cannot proceed. So what he does to resolve all the existing litigation in that property, to speed up the process, he gives something called as hardship allowance to the existing residents, so that they clear up all the dues and gets the NOC and permits the builders. Unless and until each apartment owner authorizes and gives a no objection, the process cannot be commenced. So he gives that also. And to meet up with the new style of living, because once a redevelopment comes in, there will always be extra amenities. Obviously, it will be better than their existing living conditions. So when the quality of life of the people do not change, but only the living is going to change, in such cases, to accommodate that, he's not going to charge for certain number of years the maintenance charges also. Because once the swimming pool and other amenities comes in, the existing low income group or middle income group may not be able to pay the higher maintenance, bear the maintenance cost. To accommodate that, he will be giving zero maintenance for the future certain years. So these are all the contractual terms which are necessarily to be present when they enter into the redevelopment process. So this is one thing. Now we are done with the complete understanding of redevelopment. Let us understand the legal provisions under GST. So for the application of GST on redevelopment, these are all the important things. I am skipping all this because you all know development right, related definitions, construction service, works contract, all this I'm skipping. These are all the legal terms in GST which we necessarily need to know if we want to analyze the GST implication, supply valuation. These are all the basics. So definition. Okay, so what I have done, as I mentioned in the beginning, real estate, the concept itself is subject to various interpretations. Anybody can have their own independent views. They can litigate it till the Supreme Court. There are cases are pending. So wherever there are differences, I have just, the relevant definitions relating to this concept, I have brought in here, and I have added my comments. So when you say section 252, goods means every kind of movable property. So to qualify as goods, it has to be a movable property. When you call it as a service, anything other than goods. Okay, so the thing is, anything means everything. Anything includes everything. So whatever is not covered in goods is covered under services. So the thing is that whenever we read a definition, whether we have to read it as a purposive interpretation or literal interpretation, that is also debatable. The purposive interpretation will suggest that the transaction should, when you say it's a service, it has to, fulfill the essential characters of a service. You cannot say, for example, actionable claim. Okay, if you want to call an actionable claim, it neither fits in here nor fits in there. But we have to apply the test of essential characters of goods or essential characteristics of a service. Only then we can decide. So I'm just giving a pause. I'm making you to think, because it will be helpful for us to analyze whether whatever we are discussing will fit into the goods or services. Okay, so next is that 7.1 AA, which was inserted, where the concept of mutuality was completely, removed from the definition of GST itself. So whether the society develops for its members or whatever may be the reason, it will be treated as a supply. Any transfer of goods or services for a consideration is a supply. So the concept of mutuality is no longer exist as per this. So the society, when it undertakes the services, will be called as a business. So the society is subject to GST, just like a landowner. Then when you call it as a business, this is what it is. These are all not relevant in 39 GST Council meeting. A construction service versus works contract. So what is a construction service? What is a works contract? The only difference between the construction service schedule 2 entry 5B is that construction is intended for sale to a buyer. When you are finding a buyer, even in the redevelopment process or joint development, only when the intention exists for, the developer to sell it to any third, external buyer, then only it fits into the definition of construction. Otherwise, it becomes the works contract. Works contract means like, any kind of activity which is involved in the immobile property, where the transfer of goods is it becomes a part of it. For example, I'm engaging a contractor to build my house, to install a lift and whatever. Once the project is completed, he will transfer the lift in my name. So it will not be treated as a construction agreement. It will be treated as a works contract. So it involves an immobile property, but there is a transfer of some title towards the completion of the agreement. So this is just for our understanding. If you see 1B, any transfer of right in goods or undivided share in goods without the transfer of title thereof is a supply of service. In schedule 2 1B, if you see, it clearly says transfer of right in goods is a supply of service. Transfer of right in goods. Okay. So next is that definition, schedule 2 para 5, agreeing to obligation to refrain from an act, tolerance of an act is a service. Transfer of right to use any goods for any purpose for cash, deferred payment or other valuable consideration. Transfer of right to use any goods. That means transfer of development right. When we come, these definitions would be, we will be cross-referring here. So that's why I have highlighted. If you see sale of land, schedule 3, sale of land subject to clause B. So whatever is not covered in 5B only is covered in schedule 3. So next is that what is a RERA project, person who constructs, the purpose of selling, or these are all the basic, definitions. There is a notification 3/2019. If you look at the GST from 1st of April 2019 and prior to 2019, there are a lot of changes with respect to real estate sector. The notification 4, 5, 6, that itself, I would say it's a book. The notification itself is about 28 pages, plus there are 1 FAQ, 2 FAQ. There are so many, concepts which are built into that notification. So when we want to really understand, we have to go in depth. Whatever is relevant only I have picked up here. So when I say this is for time of supply, and all other provisions are also applicable, just like how it is applicable for any taxpayer, section 73, 74, 76, scrutiny of returns, whatever it may be, all the sections are applicable even for the society. So this is rule 27. When is it applicable? It's an open market value. So this is one. These are all the basic levy notification. Notification number 11, basic section 11, which says that 9% for construction of a complex with the HSN 9954. And notification 12 is an exemption notification. Labor contracts is exempted. And also, you know, these are all, I'm skipping all these basic things. I'm skipping here. I'm skipping here, these are all known, very well known to all of you. So I'm skipping here. This also I'm skipping. Yeah, this is the gist. I'm just summarizing only that. Notification 3 says, prescribes the rate for GST in case of residential and commercial apartments. And it also gives the notification number 3 gives the valuation of construction services. And notification 4 says exempt supply of services provided by way of TDR for the construction of residential premises in respect of entire consideration or part consideration has been received before the issue of OC, CC or first occupancy. It means that any consideration received before the OC is exempt. After OC, you know, whatever, then the taxes would be applicable. Then mechanism to value development rights, how the development rights are to be valued is also here. Notification number 5 says taxability in respect of services provided by way of development rights on a reverse charge mechanism. And also it gives the detailed valuation of how it has to be valued with the illustration, with the ABC, with formulas, all that are present in that notification. It's a very detailed notification. Notification number 6 says that the promoter to be a registered person to pay tax on the supply of development rights and the time and when it has to be paid. These are all there in the notification 3, 4, 5, 6. These are all the relevant notifications for our discussion post 1/4/2019. So prior to 2019 was very simple. It was falling under development rights or falling under the residuary clause. And tax, of course, because of residuary clause, it was taxed at 18% under forward charge. So when I say summary of taxation, so I have bifurcated into 3: development rights, construction services to the landowner, sale during construction to the buyer. So how we have the joint development agreement, similar analogy applies even for even for the self redevelopment. The society transfers the land. Society transfers the land to the to the developer. Transfers in the sense it transfers it does not transfer the title. It transfers only the some portion of the right, like development rights are transferred. In turn, the developer in exchange of that he gives back the completed units. So there is a construction element is involved. The supply is being the construction activity. And also the developer sells it to the external buyers. So the taxation can be put into 3 baskets. One, what is applicable for the landowner, that is the society. What are the tax implications for the developer when he's selling it to or when he's exchanging it to the landowner. Third, what are the tax implications when he is selling to the buyers. So that's how I have bifurcated. So these are all the relevant notifications. These are all the rates. This is the valuation. Any taxation can be put into raising hands. You are free to stop me and ask, because this concept is also new to me.
Madam, so here, who is the landowner? Is the society or the members of the society?
the landowner, that's what I'm saying. In Maharashtra, the land is held by the society. That means Resident Welfare Association here. Whereas in Karnataka, the concept is completely different. The Resident Welfare Association does not own anything. Here, when I say landowner, the society.
Okay, so if it in the context of Maharashtra, it is society, but assuming if redevelopment is happening in Karnataka, so it is the each of the apartment owner is the landowner.
Correct. Each of the apartment owner will be the landowner, and they will be, it will be merged, like, they will be, the society will be the intermediary. They will be transferring the right to develop, authorizing the entire activity to the society.
Okay, so there are, so there is multiple landowners and single developer.
Correct. Multiple
Okay.
landowners. So how it is going to get transferred? See, if you look at it currently in Maharashtra, that's why I have even changed the, right from Malleswaram to Matunga. In that,
Okay.
yeah. How will it happen? If you look at in Karnataka, there is only one single owner. Then the kata is getting subdivided to individual owners. There it is not like that. The land completely right from the birth till the end, it rests only with the society. So only one property tax. Here, 1,000 property tax. It is subdivided through deed of declaration. It's all subdivided. So conceptually, it is different. Whatever I am discussing is only for Maharashtra, but the concept wise, more or less the same. But how it will be implemented?
Sujata madam, but this kata is only a reference for who will pay the, in the revenue records, who is supposed to pay the property tax. But the kata doesn't indicate title, no, madam.
No, see, if you look at property ID, PID, okay, assume the land is held by some, say, Vardha Reddy, this land, okay, that big piece of land. After that, once when I buy, single unit when I buy, it gets transferred to my name, apartment. It will no longer be in the landowner's name. Whereas in Maharashtra, I will be paying the property tax. Whereas in Maharashtra, the land will be held only by the society. The residents, the apartment owners do not own any piece of land.
Okay, madam. So, the point you brought it out here is, that katas are subdivided.
Correct.
So, but that is only an on the title deed documents. See, the who owns the property depends on the title documents.
Correct. So the landowner ceases to be the owner. That original landowner ceases to be the owner once the apartments are constructed. Correct. In Maharashtra.
Yeah, see, so that the sale deeds are executed. That is when the individual, whatever the home buyers, they become the owners because of this virtue of sale deeds.
Correct.
But in society also, is it like, they have the individually executed sale deeds? Yes, right?
Correct. They have the individually executed sale deed, but they become only the members of the society. The land is held only by the society. See, assume if I want to go for a bank loan, what do? I take the EC. When I take the EC, the history will appear from landowner to this, then to Sujata. Whereas if you go to the Maharashtra, when you type the EC, any encumbrance, if you want to see, I can also pledge my property. Maharashtra also I can pledge the property, but the title will be, so the society has the track record of to whom I am selling, where I am pledging. The NOC and control point rests with the society. That means the Resident Welfare Association.
So if, what is the right a member gets?
All rights are there. It's more like, a long-term lease kind of right.
Okay. So it can be assigned to another person.
Everything.
No, because unless it is owned, he cannot transfer it. So if it is a right which is not akin to ownership right,
correct,
then he can only assign it and not transfer.
correct.
I mean, yeah.
No, I think it is just like shares. By virtue of becoming a member in the society, you will be allotted one apartment. If you transfer your membership to other, I think there
Correct.
also there will be a transfer of ownership.
Okay,
By
so here
transferring
the,
the membership in the society, I can transfer the ownership in the.
okay. So the price is for transfer of membership and not for transfer of property.
Correct.
Yes, yes.
The eventual benefit because of this transfer of membership is
Derivative
the
value. Derivative
access
value is
to
the
the,
laptop. Sorry. The property is the derivative value.
okay, okay. Yeah,
I
okay.
think we had Raheja Arcade in the similar lines. Raheja Arcade was on the same lines. There was the shares were being transferred, and when the share is being transferred, that much of square feet of the super built-up area is transferred as it is. That's how I think they had designed it. But that concept was a failure in Karnataka. As such.
Yeah, so that's how it has to be, because I'm not practically involved in any of this. So whatever I'm sharing is just my understanding of my reading. So as rightly pointed out by Mylar, it is how I have a number of shares in a company, the same way it is transferred. The concept is the same. So unlike Karnataka, the concept is different. So this is what the, I have put it under different pillars. What is the valuation? What is the rate? What is the entry number? What is the rate of tax? What is the time of supply? And it is referred and drawn from which notification? This is limited to redevelopment. So when we apply the case study taxability, we will come back here. Okay, we'll refer it from here. So these are all the circulars. 2 circulars are there. There also it talks about redevelopment. That's the reason why, if you see, there are not much noise about redevelopment, because it is treated as same as development. And the FAQ, one of the FAQs also, I have not put here, one of the FAQ also, it says the taxation with respect to GST is more like a JDA only. So, so these are all the, this is something which is very, similar, I would say. This judgment was there in the, I think, service tax era. Now, I think it is pending before Supreme Court, or it is, I think this case is a decided case in the Supreme Court. They call it as, why am I discussing here is that it will be relevant to decide whether it's a goods or service. This is the test in that TCS case, where if you want to say an activity as a goods or service, what are the basic tests you have to carry out? It says utility, capability of being bought and sold, capability of being transmitted, transferred, delivered, stored, and possessed. So these are all the criteria. If everything fulfills yes, wherever I have put X, it is yes. So if it fulfills everything, then it is a goods. If it does not fulfill, in services, if you see, there is utility. Is it service tradable? No, service is not tradable. You cannot trade services. Whatever either I can add or I can reduce. Same item cannot be traded. Service cannot be traded. The reason why I'm bringing it here is that transfer of development right is called as a service, but it is traded because of Schedule 5B. So whatever, Schedule 2(5)(b). So whatever it is, this is the outcome of that. Please keep this in mind. This is what the judgment says, so I have put here. So now let us come back to we have understood what are the, what is the background, what are the, legal concepts, legal provisions which we have to understand before analyzing the case study. What are all the, judicial precedents relating to this? Now let us get into the case study. Here, Paresh Homes, I hope all of you must have read this case study. So I don't want to read once again and waste your time. So I am just getting into the facts of the case. Facts of the case is that Paresh Homes is a cooperative housing society in Matunga in the state of Maharashtra. It has got 100 members owning each flat, one flat each. Okay. The carpet area of the flat is 600. Through this redevelopment process, because of the dangerous condition of the apartment, they have identified a developer who has agreed to give extra square feet. Okay. Extra square feet depending on the FSI. So this was approved through EGM. The proposal was approved. On 10th April 2023, the society entered into an agreement with the builder, Total Environment, for redevelopment. The clauses in the agreement is that each unit, that means each owner will be entitled to get 30% more than the existing carpet area. So any member interested, there is a possibility that if a member wants to go for, say, 1,500 units, of course, he can go for it at a lower rate, at a 20,000 rupees per square feet. Whereas in the market, he's going to sell it for 30,000 per square feet. So the existing owners are getting at a lower rate, even if they go for extra units. That's what you have to remember. The developer receives permission for commencement on 12th June 2023. Occupancy certificate is expected in December 2024. The dates are important for us to calculate the development rate and, taxation, what is the point of taxation. So that's why the dates are mentioned here. The developer has provided free accommodation till permanent alternate accommodation is provided. That means he's providing it for free. There is also an option, those who do not want to opt for this alternate accommodation, they can collect in cash and go to their hometown. Assume I am having an apartment in Matunga, but because this process will take about 2 years, till such time I can go to my parents' house and stay in the village, but still I will be eligible to get the compensation. It's not necessary that I have to stay here only. So the assumption, what are all the assumptions which I have done in this case study given? The project commenced prior to 1/4/2019 or later. That can always, we can discuss both, because there are a lot of changes the cutoff date of 1/4/2019. And the Total Environment developer opted for new scheme, because I think during that notification, if you want to opt for new, you have to select in the portal. So he goes for new scheme. The project is at Mumbai, Maharashtra. The Total Environment developer intends to sell the units to the buyers. So otherwise, one thing we have to very, very important, which we have to remember, in case the developer does not intend to sell to the external buyers, I mean, the prospective new buyers, this concept of redevelopment itself will not, it will be like a contract where the society calls somebody and then, he say, okay, you give so-and-so, so-and-so for 100 units equal to 100 apartments. Existing 100 people will get 600 square feet is the existing area. There won't be any additional units created, means it will not fall under joint development agreement. It will not fall under redevelopment. No developer will come forward for this kind of model unless and until he is able to extract additional units. So we have to remember, through this process, Total Environment is generating additional units. That additional unit is where his margin lies. That is what he's going to sell it to the external buyers. So that's also one of the assumptions. The society is registered society under Maharashtra Cooperative Societies Act, because if it's not registered, then whatever that Directive 79A will not be applicable to this. Since there is a SBM, all this are all mentioned in that, we assume that the society is registered. Why I'm saying it is a registered, there is a case study recently, that Parihita Constructions. So that's the reason why I have highlighted. The member society, that means the RWA, relinquishes only the right over the land, and there is no element of sale of TDR. There are two things we have to understand. There is every possibility that the society can also buy TDRs. The society can also, sell the TDR. Extra TDR can be developed. We are not debating on all that. We are simply, just for our simplistic understanding, the existing, the society relinquishes its rights over the land, and then giving it to the developer for redevelopment. So what are the issues in this? Issues are whether the society has provided service to the developer in the form of development right. Okay, so development right is a big concept which is debated, and it's very controversial. Some are taking very, of course, it is litigative, taking views depending on their power or appetite for litigation. So here, the issue here is that since the society has received notice, we have to analyze whether the society has provided services to the developer in the form of development right. Is there any development right exists? The point of taxation for development right is at the time of agreement. If it is a taxation prior to 1419, or if it is subsequent, is there any change in the taxation of development rights? The value of development. Yes, sir.
One small doubt before that. See, there's new units. Is that society will create a new membership to the developer, and the developer will sell that membership, or it is like selling the unit outsider first and then they becoming a member of the society, or those unit will independently without any link to this society will operate? So that three things I think crucial to understand the taxation.
Yeah, see, the new units will vest in the hands of the developer. Association has got nothing, I mean, the society has got no control over it. After it is getting sold, they'll be inducted as members of the society. That's all.
So that right of the building will eventually come to the society and they becomes only member of that society.
Exactly. So association cannot find any new buyer and sell it. Society cannot find a new buyer other than the existing members.
No, that's fine. What I thought will association will give membership to the developer and developer will sell membership. I thought that's why I just wanted to clarify.
See, to become a member, they have to be the owners. First, society should own the land. So for that, society should own the land. Member should also become the member. I mean, the buyer should become the member to be part of the society. So the developer will identify the buyer, sell it, then only he becomes a member of the society. That's how the flow is.
Madam, so in case of redevelopment, an existing member can choose to relinquish his right in favor of developer and take the compensation in money.
Correct.
Or the existing society member say that, okay, let the developer or the society allot the unit to me, I will resell it to someone. Both options would also be possible.
Correct. Both are possible. Whatever may be the case, ultimately the NOC has to come from the society. Say, assuming the development is going on, okay, I am the existing, I'm the old member. When the construction is going on, I decide to sell. Okay, so what happens? I will not be able to find a buyer. I will approach the developer. Boss, you please find a buyer for me at some market rate, higher price than what I am going to buy. He will say perfectly fine. He will identify the buyer. He will assign the right to him. But all this should be approved by the society. Society should exit me and make him the incoming, that new buyer as a new member. It has to.
Madam, is the society approval, is it a procedural? Like, does society have a right to say, no, I will not induct this person?
Society cannot say no, unless and until, see, it is like, it's my right to transfer, no? So society has not say.
So society has a no say in approving someone's membership. It is only a procedural, like an entry in their register. This is an exit person, this is an entry person.
But it becomes a confirming party. See, the thing is that unless and until.
No, it is that is what it is, a confirming party for a procedural aspect, but without any legal right on any of those membership.
No. See, they also not on the confirming party in the agreement also. If I have to transfer now in Karnataka, what happens? If I want to sell to somebody, it's just a procedure for me. I have to go to the association, give me NOC saying that I have paid all my maintenance dues. That's all.
Correct.
Here it is not so. I have to transfer the shares to you. If I have to sell it to Venu, then the association also should attest, just like how I am transferring my shares in a company.
Correct. I am still saying, all that I am saying is the right which the society has is a subsidiary right and not a principal right.
It is not a subsidiary.
Like for some reason, okay, I brought Sujata. Can society say, no, I don't like Sujata, you go and find some other buyer?
That cannot, see, depending on what kind of person, bylaws, what it says, assuming that as per the society norms, bylaws, if they say that it should not be sold to some NRI, assuming I am just creating some hypothetical, you cannot, the society cannot have any non-resident or foreigners, forget about that, foreigners.
No problem. Let's
Okay,
say if it is, we'll continue the same example. Let's say if it's a community driven, let's say that, okay, we would only want a Hindu Brahmin live here. Fine. I got a Hindu Brahmin. Can they reject? No, this Hindu Brahmin color is white. I need a black Brahmin. Nothing like that. No.
Nothing like that. If the bylaws are so saying that, Hindu Brahmin white color, this, then of course bylaw is the supreme. It has to be driven by the bylaws. But
correct.
Remember, bylaw cannot be, overriding the general norms or whatever.
Correct. It can't go beyond constitutional right.
Constitutional, yeah. So bylaw cannot say that religion based or anything. It cannot.
Exactly. So predominantly what I'm trying to say is the right is of the member and not of the society. Is only a procedural thing to do.
Correct. As compared to Karnataka, it has got more rights. That's all, because it owns the land. Other than that, nothing.
Got it, ma'am. Please proceed. Sorry.
Yeah. So the value of land is 234 crore. The point of taxation, basically it is asking about development right. It revolves around the development right. Is taxable or not? What's the point of taxation? What is the rate? If it is before 1/4/19, what should be? After 1/4/2019, what would be the taxation? And what would be the taxation to the developer on the temporary accommodation provided to the existing members. So this is what the department notice is all about. So that is what I have put under, mentioned under issues. So let's analyze the problem. Here you are open for any kind of discussion. The floor is open. So whoever has got any different views, please feel free to add here. Here, one thing I want to put a disclaimer. I am just going by the understanding that development rights are taxable. Okay, because that's a basic thing. I am not disputing that. Development right is a goods, services, I'm not getting into that debate at all. Development rights are taxable and there is a specific entry. So if that being the case, whether the society has provided service to the developer in the form of development rights. When the society is transferring the land to the developer, is there an element of service? If so, what is the taxability? The answer is yes, because the society owns the land. So when it is transfers the land, it comes with a bundle of rights. One such right is that development right. When it is giving that right to the developer, yes, GST is applicable. Anybody has got any different views? Please add.
Only thing which I would like to add is, so in Maharashtra, we are saying that the society is the supplier of development right. In Karnataka, we are saying that it is each of the individual flat owner is a supplier of the development right.
Correct.
Okay.
So development rights are taxable. So the point of taxation for development right, what is the point of taxation? We go by time of supply, section 13.1, 13.3, whatever, 13.2 and 13.3. If you go by the notification number 4 for taxation of development rights, prior to 1419, because in that case law, it says that prior the project commenced before 1419, and we are assuming that the developer goes for the new scheme. There are two options: before 1419, what would have been the taxation; after 1419, because there is a drastic change. I really don't concur or completely satisfied with the view. Of course, for the limited purpose of discussion, if you look at development rates in service tax era, it was not taxable. If you look at 1/4/2019, it was under forward charge. If you after 1/4/19, it is under reverse charge. The concept is the same. Concept as legal principles or nothing has changed, but GST has decided to tax it. So let us stick on to that. So if that being the case, 1/4/2019, it was under, there was no specific entry. Though I think in notification number 12, there is an entry 41A for development rate, but 41 in notification number 12, rate was not specified. The HSN will come under residuary clause. So 18%, the point of taxation will be 12/6 on the day of the possession is handed over. That means when the landowner, when the society enters into agreement for handing over the the building to the developer, that would be the point of taxation. That means without even having money, the society will have to bear that whatever 18% on the what value. The valuation would be depending on the market value of whatever is the consideration which is going to give on that 100 apartments into the say guidance value. Here it is 20,000 rupees into 100 into 780 square feet per apartment. On that 18%, the society has to bear it. This is the scenario before 1/4/19. Whereas after 1/4/19, it is on the RCM, reverse charge mechanism, only on the unsold land. There is a conditional exemption wherein the landowner need not pay any tax because it is exempted. The taxation has been shifted to in the hands of the developer. It is applicable under RCM at 5%, or there's a formula for that, whichever is that lower. So 5% on the unsold units under RCM, the developer has to discharge. The question here is that what is the point of taxation for the society as well as the developer? So this is the answer. Anybody wants to add anything here?
Madam, so here the Karnataka, there are multiple suppliers. I'm just wondering how would the developer raises an invoice to each of the landowner. Maybe as a part of construction services, he will give it to each of the landowner. Okay, got it, man. No problem. Continue. Yes.
So the valuation, what should be the valuation? This is, I have just put it in numbers, the same continuation of that only. Okay, so this is one thing. This is also, I think both are same only. Okay. So
Sujata, where do I get the market value? How do I arrive at the market value?
see, the problem it is given market value, what you sell it to the external buyers.
Okay. Means what is being sold, see, because you only told there is a 20,000 and a 30,000.
20.
So if it's for an outsider, it will be 30,000. If it is to the society members, it's going to be 20,000.
Correct.
So there again, because for the valuation, it takes if it is that RRA, then it's going to be 5%. Otherwise, it's going to be a different scenario. So here probably it could be either commercial or residential. That is what we could also have two options when we are discussing. So then we need to take the first sale value.
Correct.
Or that could be the thing. But here, when we look at the transaction, there's not going to be any sale only, right? Because once the apartments are being given, will there be a registration happening at the sub-register office? I think Maharashtra, there is nothing like that. There is only going to be whatever you have a share based on the 1% or 2% or whatever 10 rupee share or whatever we are speaking about. So based on that, we will have to arrive at and we'll have to pay the stamp duty. That's all, right?
Correct, correct. See, in Maharashtra, the stamp duty is paid at 2 stages. One at the time of entering into an agreement, that is transfer of development right. That is also, that agreement is registered. When the society enters into agreement with the developer, at that point it is registered. At that point it is registered. It becomes, because it is a revocable contract. That is registered, and once it is transferred, there's no transfer. Like, he develops and then he just, it is just like any other contract, completion contract, it ends there.
So here also there will be a JD agreement, right? Similar to that, whatever we enter, similar to that, or
contractual terms. I didn't go in detail. I put it in my PPT. It is there. What are all the contractual agreement should be there in the in the agreement when these kind of transactions are entered into.
Okay. Yeah. Thank you.
So,
Madam, the money given to the buyers in terms of rehabilitation till the project is done should be added to the value of the development rate, right? Rent.
Yes, consideration. Correct. How we call it as a money consideration, how we give for normal JDA.
Yeah.
That also forms part of the consideration. Correct.
Yeah.
So as such, there is no difference. It's a different model. That's all. Different coloring, different jargon. That's all. Conceptually the same.
Madam, on valuation, so there are 2 values, right? One is in your example, one is 20,000, which is given to the existing members, and 30,000 to outsiders.
Correct.
So what would be the valuation for the purpose of GST? Should we consider 20,000 complete?
Correct. That also, see, it says 30,000. How can 30,000 be correct? That also I have put it in my, see, we will conclude it here. Okay. This is strictly as per whatever is given in the notification, what is there in the GST provisions. Okay. This is how we have to follow. Okay. So I will conclude here. Whatever you have asked, no, Deepak, same doubt even I have. Okay, points not to be discussed. If you look at it, not covered. I am covering all that here. Whatever my doubts are, after doing this, I have got hundreds of doubts. I am putting it there in the points not covered in the presentation. For our presentation, when I discussed with Jatin sir, he said, first explain the concept, first understand the law, stick on to it. Don't bring all your doubts and confuse the members. So that was a clear instruction given by Jatin sir. Okay. So even the last presentation before entering into, presentation, I spoke to him. He said, you make it very clear. What is your understanding on development, redevelopment? You are calling it as self-development. I said, sir, it's not self-development, it's self-redevelopment. So you make it clear that both are, whatever may be the coloring, the concept principles are the same. So we will conclude it here, that so that none of you are carrying back home any kind of non-clarity or something different. Maybe the concept may be different, but ultimately you have to carry home that whatever you know about JDA, the same thing is applicable for redevelopment also and self-redevelopment also. Nothing is different. So that should be the bottom line of today's presentation. So let me conclude. GST is applicable on the development rights at 18%. If it was before 1419, forward charge by the landowner or the society. RCM, if it is after 1419 by the developer. And there is an exemption post 1419 if it is a RREP project, and there are conditional taxation at 5%. and tax to be paid on the date of issuance of completion certificate. The developer, that is total environment, has to levy tax at 7%, that is 3.5 plus 3.75 plus 3.5 on the two-third, which effectively comes to 5% to all society members. That means on the construction value, 5% will be leviable by the developer to the society, and to the external buyers, he will be charging the same 5%. Once the project is completed, we all know it fits into the definition of Schedule 3. This is the basic understanding of the today's entire 1 hour of presentation. With this, thank you so much for patient listening. If you have any doubts on whatever we discussed, the floor is open for discussion. If you all say yes, then I'll move on to the next future slides.
Please continue, madam.
Okay, so nothing, right? Okay, fine. So now all of you are clear, right? Now let us understand what all to be, not confused with our present understanding. This is only for our food for thought, nothing to do with our practical or anything. Whatever I have, analyzed, I thought I should share it with you, not to exhibit my knowledge or anything. It will be a good understanding for you also. That's the reason why I'm sharing, but for nothing else. Okay, so when we say development, here is my doubt. Okay, so first and foremost is that the development rights are going through different kind of coloring in service tax, in GST before 1419 and after. When the concept is the same, why is it getting complicated here? Is the question. So
when it's complicated, what are you saying, madam?
See, the government has decided to tax. Okay.
Okay.
Somehow it has decided development rights should be taxed, brought into GST. Okay.
Okay.
It's because it has decided to brought into GST, it cannot, breach all the basic definition itself. Everything is an assumption. Is it first and foremost, let's come from GST so that we will be able to, let us come from GST. Okay. Is a development right chargeable under GST? You just touch your heart and tell me, is it a goods or service?
Service, no, madam.
Where? How do you say it is a service?
Because the right that has been given.
Where is it in the section 7 supply?
Huh.
Where is it? Where is it? Which form of supply is that?
It's a transfer, no, madam.
Transfer of what?
Transfer of right.
Where
service.
is it written?
Where is it?
Where is it written? Transfer of, it says rental lease. Where is the transfer of right term is not there, no?
Madam, so if you say that the one of the element of the transfer is not fitting under say lease transfer, barter, etc., I think it is any other would also be a transfer. So
That's
a
what
temporary right that is given will always be a transfer, and section 7 is an inclusive definition.
Okay. So first, before even coming into section 7 supply, it has to be goods or service.
Right.
So is it a goods or service?
Service.
How? How do you say it is a service?
Because it is not a good that is been transferred. So it's a service. It's a right that is given. So isn't it a right, a service?
That is what. Where is it? See, I am not saying that it is not. Schedule 2 is only classification, correct?
Schedule 2 is
only classification.
Not all classification, but defined classification.
Sorry?
Schedule 2 is a mandatory classification.
Mandatory classification, you are saying. Okay. So when you say first it has to fulfill the definition of goods or service, correct? So schedule 2 is only for your confirmation, whether is it a goods or service.
So some notified entries.
Correct. So you have to satisfy yourself that yes, it is a goods or it is a service.
Anything other than goods, isn't it service, madam?
So that is what. Is it a, when you say anything other than goods is a service, first development right there itself, you are artificially assuming, no, anything other than goods is a service, or development right is a service.
No, madam, isn't it a right a service?
Right is not a service. See, if you, I have even, I'll show you one thing. I have even, see, if you want to.
Madam, I'll see, like Ola and Uber has a priority parking in the airport. Ola parking is somewhere, Uber parking is somewhere. If Uber bids and says that, see, look, my cab should be placed, my parking place should be placed here, I always need to have the first right. And the airport says, okay, I am giving you right, that okay, your vehicles can be parked first. So how do you say that a right given will not be a service?
No, that is clearly a service, no service
How?
that he is offering.
No, it's giving a right. See, the parking rental charges is same for everyone. But a right to park first is a right which is given.
Right to park.
Sujata madam, anything other than goods is service now.
That is what, if we are convinced with anything other than goods, it requires no further discussion. If you are convinced, wherever I am not able to understand where it is, okay, anything other than goods is a service, that is where the entire development rights itself is taxed.
Madam, are you saying that it is a land and hence cannot be taxed? Is that the contention?
See, one is that is another way of arguing, is that anything attached to earth or any transfer, anything pertinent that to that, definition of Transfer of Property Act.
Correct.
So it goes along with the land. So it should be treated like a land. So it
it is an immobile property and it is not land.
So immobile
Correct,
property, immobile property. So it should be, grouped under Schedule 3. It's a Schedule 3 transaction.
No.
See,
See,
Schedule 3 is
three
land,
clear.
not immobile
Land
property.
only. It's only a land. It's a right. It's a land inside the right. This development right is akin to land because it goes along with the land.
Sujata madam, see, it is not anything connected to land. It is sale of land is only part of Schedule 3.
Correct.
Sale means absolute transfer of ownership.
Correct.
Nothing
All the
less
rights,
than that.
development right is one right.
Anything what is not there, if you look at the Schedule 3, whatever is not covered under Schedule 2, 5B goes under Schedule 3. That's what it
Sale of
says.
land except or subject to. So the primary criteria is sale of land.
Correct.
Only the absolute transfer of ownership which can happen, via a sale deed, by and large, which is the, in fact, during RRC, that's what we even discussed. What about gift or what about other modes of transfer? See, by calling it as sale, are they really limiting the transaction to only a pure sale transaction, or maybe like transfer of land would have been a better terminology? See, we don't know, but then definitely it cannot include immovable property in Schedule 3, madam.
Okay.
Because sale of land means Section 54 of Transfer of Property Act, a conveyance deed has to be executed. That is the test there.
Correct.
If any test below that inferior, then it becomes rights and not the absolute.
Okay. So you mean to say it will not fall under Schedule 3?
Absolutely.
Okay. So coming to Venu's point, he said about Ola's preferential right to park in the beginning, correct? In the starting point.
Yes, madam. Yes.
What is that example? Can you tell me?
No. I was only trying to say, the moment you say something is a right is always a service, not goods. That's all I'm saying.
See, right is always a service. Only thing is that it is not specified anywhere. If you look at Schedule 2, what it says is that construction of a complex building, civil structure or part thereof, including a complex or building intended for sale to a buyer, wholly or partly, except where the entire consideration has been received after issuance of completion certificate, after except where the entire consideration has been received, where the required by the competent authority or its first occupation, whichever is earlier. That's what it says. Construction
Can we also look one more aspect of the schedule 2, second entry, which speaks on any lease, tenancy, easement, or license to occupy land. So there are certain subsidiary rights which has been notified as a supply of service. So can we try to fit into that aspect also, saying that this development right is a subsidiary right and not a primary right, but it is relating to occupying the land. So can we take it on that basis and saying that it is a license and to occupy the land and it is called as a supply of service? Because as Annapurna Shrikant has rightly pointed, there it cannot be a third schedule. So we have to say that whether it is forming in the form of supply of goods or service, that is what we are trying to identify.
Correct.
So I think when the law has specifically recognized that there is a supply of services in the case of lease, tenancy, or whatever it is, so I think it still fit into the supply of service, what I remember. What I can understand from the rights, what we are discussing on this development right. I agree there is no specific terminology of development. Yeah, there is no specific reference of development in second schedule. But I think if we extensively look the definition of license, what has been given in second schedule, I think that will take the color of transfer of development right, which is going along with the possession of land actually. So that is
In
what
fact,
I
if we go through this section 52 of Indian Easements Act, this development rights is a right, is a license coupled with right.
Yes, with permission.
Interest, license coupled with interest in the property. So definitely, it is primarily a license arrangement, but it is not a mere license or a bare license.
Correct.
In fact, section 52 has categories of licenses, and there it is license coupled with interest, because developer, apart from getting those permissive rights to enter the land and stuff, he will construct, spending his money, investing in it, and because of which he acquires rights to that constructed property. That is where this tripartite agreement would be required to enable transfer of land related rights from the owner of land to the home buyer, and transfer of constructed property related rights from the developer to the home buyer. So the title becomes clear and complete. So that is why, because he's making some investment and coming up with some immovable property structures on the land which he does not own, because of that JDA, he gets that license coupled with interest. That is the kind of the right which he acquires.
Right. Yeah, I agree with that. So I think we have to look that entry also along with the entry 5. I think we should also look on entry 2 of this schedule 2.
So entry 2, only thing is that entry 2 does not have a clear specification of development right, but it says lease, tenancy, easement, license to occupy land is a supply of service. Okay, so
yeah, but here it is not a license to occupy the land, license to further develop it. So that being the situation, although it may not exactly fit under this entry 2, we need not even visit schedule 2, because since schedule 2 is only for the listed transactions, we can just go by the basic definition of goods and services like we initially discussed. Since definitely this is not goods, it would get covered there, and even that supply definition, we have license also as part of it. Here, there is a more specification in entry para 2 of schedule 2, that license to occupy land. Now here, developer doesn't get a license to occupy it, but to further, develop on it.
See, the first set of argument, okay, what they say is that it is neither goods nor services, transfer of development right. Okay, they take the reference of the TCS judgment. If you develop it, that is what I have just, with my understanding, I have put here. If you look at it, what is a goods, what is service? Okay, it says in the judgment, have an utility. Yes, goods also have a utility. Service also has. Here, there is no utility for rights. It has only interest. What you have in the development right is only an interest. Okay. Whether only these 4 categories only are to be applied, there can be 100 other criteria you can apply to, satisfy the test for to qualify right as a service. Yes, there can be, but in the present judgment, it is not there. So I am not able to conclude.
Madam, even in Ola Uber case, where is the utility, madam?
Ola also it is not there. It's only a right, only an interest.
So just because there is no utility, can we say that it is neither goods or services? I think we are somewhere. So I'm not trying to rule over you, but I am somewhere we are saying that the act has not this word, right? So I will not consider. I think it is a very weak and narrow-minded, very difficult to convince a judge. Is what my thinking is.
Correct. See,
And, Sujata, one more aspect is like we are comparing this with the TCS judgment, which was on a different aspect actually, right? So that it was from a different aspect to identify that customized software, non-customized software,
correct,
and to differentiate between goods and services.
Correct.
So I think because there is a different theory of accretion for this construction contract, I think.
It's not
we
relevant.
may not exactly apply what has been given the principles in TCS judgment.
Correct.
So I think if we have to consider all this criteria, then I think somewhere or the other way we will not be able to fulfill all the criteria, especially in the case of construction contract.
Correct.
So according to me, linking this TCS with the definition of goods and services for the purpose of development, I think we may not maybe the right example. What I understand, what I take it up from this.
Yeah. Annapurna madam, there is this L&T related one judgment, no? Immovable property related.
Yes. Yeah. See, L&T has come
But
after Raheja.
again that.
So in that, if you refer this para 111 of this L&T judgment and para 111 of 15 of this L&T judgment, where they have tried to identify that till the time you have entered into an agreement with the customer, it will amount to a immovable property. So your agreement to works contract will be entered only from the time when you have entered into an agreement with the customer. Say, for example, your flat is completed till 60%, and after that you have entered into an agreement with the customer. So the L&T says that to the extent of 60%, it is a sale of immovable property. So there should not be any levy of taxes because there is no transfer of property in goods in the form of goods or in other form. And after the balance 40%, it is there is a transfer of property. So that is what it has been identified in L&T. So that principle is there because there is a specific agreement base they have identified in L&T. But here in GST, I think it is entry 5 of this second schedule is quite clear on that aspect.
Correct. See, like there was an exclusion under the service tax law for from the definition of service with respect to immovable property. But the scenario is different under the GST law. So those principles may not hold good under the GST.
And even in service tax, they were saying only if it is a works contract in VAT law, then they were treating it as a works contract in service tax law. So a lot of principles were borrowed from state law for the arriving the leviability of service tax in case of service tax. But now I think more or less these entries are quite clear on this aspect, and I think
it's a very difficult proposition to keep this out of taxability. And definitely it is not a goods, so it will have the color of the service.
Correct. We are trying to borrow from the definition of service and also trying to understand how the law is trying to identify the service. See, for example, what we were reading that easement also, it was never specifically mentioned, but now specifically they brought. Even these rights are also treated as supply of service. So I think the rights are going along with the transfer of immovable property. So I think specifically rights are getting
Section 7
identified.
also has amongst those 8 categories, which is specifically stated. License is also one.
Correct.
And Sujata madam, one more aspect. See, if you look at all our 3/2019 and all of those notifications, they have classified developmental rights under 9954. Now the entry in the notification, it's a service rate notification. That also indicates that the entire discussion about developmental rights and the taxation, RCM, all that HSN is 9954 is what is stated over there.
Correct.
So
Correct. So see in that Parihita. see,
9972. Okay. 9972. I think in the exemption entry notification, it is 9972. Okay.
See, the thing, this is only for our understanding, and it is not for me to say that, development rights are not subject to GST or anything. This is only for our discussion.
No,
I've just brought it
Sujata, that
here.
litigation is there from erstwhile also. So there is no conclusion till now on that.
No, but they are saying that 99% it will not hold good. If you look at the recent Parihita construction also, they said no, 4/2018 notification is ultra virus because first it is not falling under 9(1). So how come the notification can, bring in the point of taxation for, development rights? That was that Parihita construction, Telangana High Court decision. So
Yes, yes.
that was also struck down. They said the High Court said no, it is very much taxable. So if you look at it, the act and the recent judicial developments are also in line with GST only. So there is no point, at least for all of us are practicing chartered accountants. So there is no point in discussing how to be not taxed or how to argue or understand, how we can not pay tax. That is not the intention also. But this is brought in just for our understanding, that's all. So why there is a change, why the government is suddenly wants to bring in tax, we don't know. Since it has decided to do it, we have to follow, that's all. But
Madam, why do we say that government doesn't want to bring it suddenly? It's been always there, no, madam?
see, why was that under RCM, under forward charge earlier? Why it is brought into RCM now?
For a better compliance. It's like it is difficult to deal with the landowner's registration and everything. Like why Uber, Ola, they brought under RCM. I think there's a policy for their administrative convenience, they brought it.
Okay. So in that, so for before, during service tax regime, as said by Annapurna Kabra, like VAT was there under works contract. That's the reason why in service tax it was not brought in.
No, in service tax, the exemption covered immovable property, hence it was not there.
Yes.
Now that immobile property related, even in service tax also, other rights were taxed, no? Like rental, lease, whatever.
Yeah, madam, some things are exempt, something. In fact, see, even service tax, department raised levies on development rate. It's not that department did not raise. It's just that the courts have said because it is an immovable property and eliminated. That is where in GST they've changed the word immovable property to land and buildings.
So immovable property is brought in. Land only is excluded in schedule. I mean, land only is included in Schedule 3. So whatever rights attached to immovable property will be taxed under GST.
Correct.
So that is the, but on what basis then they are arguing? I don't know. Probably we may have to see.
Who is arguing?
On this development rights, there are so many cases are going on, no? Many are arguing, right? Is it
but no, see, their primary contention is landowner has lost the land. So you are equating the land as a development right and taxing. That is the primary contention they are doing, which is not right.
Okay. What about income tax? If you compare it with income tax, income tax, we are arguing other side. When income tax says that on the transfer of development right, you have, it is the taxation, it will amount to transfer. We are saying no. The capital gain is chargeable only when the it is only a permissive right. Only at the time of handing over, the income tax liability arises. That is the point we are taking under income tax. The same.
No, even income tax has given both the option. At the time of JD, you freeze and pay capital gain tax. From the JD date to OC date, whenever you are selling, it will become a business profit.
No, but
even in income tax, both options are there.
No, 2017, 2018, there was an amendment.
Correct, madam. So it gave this both the thing because there is no physical cash to the landowner to pay the taxes.
Correct.
So hence they have given the option to, like how the JD is the transfer time of supply. Only 6/2019 or 4/2018 pushed it to the OC date.
Okay. So when is it amount to transfer? Both are inseparable. So there is no separate taxation for transfer of development right in the as per the Income Tax Act. Correct? No.
No, madam, I think we are merging two laws.
Okay,
Let
so we
both
will
the laws have their right to treat
aligned
the way they
only.
want to treat.
Okay.
See, the transfer of right happens at the JDA date, but point of taxation arises when the respective law specifies it.
Okay, so in case of any cancellation of development right, what happens? It is subject to income tax as well as GST? Assuming I'm halfway, I do not want to sell.
Then there is no point of taxation. No? I agree that there was a levy, but it got cancelled.
Huh.
So where's the question? Because the liability to pay tax itself is at the time of completion certificate. So
Okay.
that
Correct,
point
but-
of
Madam,
taxation
sales
was not-
return, no?
Yeah.
Sale happened, sale has been returned.
Yes.
Both are.
Correct.
No, but then, yeah, so if at all there is some cancellation charges retained, that will be like getting covered under that, tolerance of act or whatever, something like that. So to the extent that there is a retention of consideration, there is a change in the service per se then. Not a
That
change, but
again,
then.
that again goes with your contracts, like during a JD, how you have entered into a contract, because there will be definitely this kind of clauses in case of cancellation. How will be the treatment? That is a different, that will be your contractual obligation. But what I'm saying is, I agree that levy has arrived at the time of JD, but the point of taxation is deferred till the time of completion agreement. Say, for example, I entered into a JD and then I cancelled it. So it doesn't mean that I am liable to pay the taxes, because the activity has not taken place itself. So I just cannot say I've entered, so I'm liable. Because the liability to pay tax is nothing but the point of taxation, which is arising at the time of completion certificate. So there is no completion activity itself. So according to me, I think we have to go with the facts and agreement clauses, how they have entered. And based on that, the impact of taxes on cancellation will be decided.
So if you treat it that way, then this development right does not have its own independent existence. It goes along with the land. If that land
Yes.
transaction cancels, this also you don't have to pay. It is only
Yes.
as per the breach of contract, what you're paying is only some forfeiture amount, something, whatever you call it. You will call it
Yes.
under different head and pay it.
See, basically,
Mm.
this is arising for a residential. See, this RCM, it is basically arising for a residential apartment.
Correct.
For other kind, it is
One
quite
per-
clear. Only for the specific, they have given the point of taxation.
So anyway, so this is one school of thought. Like, I'm not saying that this is correct or anything. Whatever I read, I have just captured it here for us to discuss. Okay. That is one thing. The second, what Deepak asked, even I had the same doubt. Like, I had 30,000. I had one second. How come it is 30,000, or I have wrongly captured valuation of construction service to landowner portion? Is that correct? Venu, can you add here? See, when we are paying the value of
That is the open market value, no, madam.
See, when as a landowner, I am giving my land. Okay, I am giving my land, so I am paying only 20,000. So why should I pay on the 30,000 GST?
Madam, can you repeat once again? Sorry,
Yeah, I
lost
am
in
giving
between.
my land for free. Okay, in exchange of my land only, he is constructing it in the developer is constructing it and giving. Okay,
Correct.
20,000 rupees is nothing but the construction cost.
Correct.
So ideally, I am a resident, or I am the landowner. So whatever is it coming to me should be charged at 20,000 only. No, the 30,000 is for the external buyer who pays even for the land. Why should I pay for the land? Land only mine, no.
Madam, so there it won't be treated in that way, because it's a development right that you have given and not the land. If I have to give one simple example, I am into the business of selling shirts.
Okay.
I have purchased a cloth
Correct.
of 100 meters, converted into 10 shirts.
Okay.
Okay. What I sold is those 10 shirts.
Correct.
Let us say the taxation of shirt is 12%, taxation of cloth is 5%. Now, can you argue saying that, hey, look, what I purchased is, or what I have is cloth? How can you say that I have not sold cloth?
No, that I understand. When you are
Okay,
selling
so
it,
now
when you are
if you understand that, can you say that you sold land? You haven't. And
Okay.
earlier you had land, now you have UDS.
correct.
So both are different. Land was identifiable. UDS is not identifiable. Earlier you had a cloth, now you have a shirt.
Okay.
So you now you don't have the land, you only have UDS. So you gave the development right, which is full value. What you got is one apartment and UDS.
Okay.
So the open market value is 30,000 rupees of the apartment. So that is the value of the development right.
You see, I'm coming back to the same example of shirt. I have already given you the cloth. You are a tailor. So you have to
Yes.
charge me only on the shirt, no? When you are charging just
No,
only on
that
the
is
shirt,
where
no?
it is like you have relinquished your right on the cloth and you are taking back the shirt. So that is a subtle difference between the job work and the activity of the manufacturing. You sold the cloth to me and you purchased the shirt from me. So developer versus construction service, contractor, subcontractor. Are you bringing me on my land you construct, or you do construct however you want and give me? Your point is valid. Now we look at it. Job worker versus sold the cloth and got the shirt. Place the same thing here. Developer versus subcontractor, contractor.
Okay, so no other choice, so we have to go like this, so we are going.
No, but isn't it the same? Isn't it happening this way? Isn't it the taxation should happen this way? Isn't it right to tax this way? You tell me, madam.
I agree. See, I am giving you the shirt, okay, whereas the other person is not giving the shirt. He is also.
Madam, he is
not
giving land. He is
cloth. I
giving
am
the
giving the
land and
cloth. I am giving the cloth.
exactly.
Whereas Deepak is not giving the cloth to you. You are a tailor, but at the end you are giving the same item to me and Deepak also. You are
Yeah,
saying
but
the
there
same
the
tax
agreement
only you charge.
exactly. So there the agreement to me is you ask me to stitch.
Correct.
Whatever you say, I am doing.
Correct.
Right. Which is like some a contractor. But here you are saying that, okay, look, here is the whole piece of cloth, you take it and stitch and give the shirts. So which is a sale and purchase.
So how is it correct? How is it fair for you to charge on the Deepak price to me? I have given you the shirt. I have given you the cloth to you.
Because for Deepak, it is a purchase of cloth and sale of shirt. So if it is sale of shirt for Deepak, so for you also it is purchase of shirt and sale of land, sale of thing. For Deepak, the levy is not on construction service. For Deepak, it is not job work. For Deepak, it is sale of shirt. He purchased the cloth and sold the shirt.
So I am selling the cloth to you. In turn, you are giving me you are selling the cloth to me. I mean, shirt to me. Okay.
There is a cloth in the shirt, but you no longer have cloth. There was a land earlier. Now you no longer have land. You only have UDS. Yeah. UDS is again not land. It is interest in the land.
Correct.
It is an immovable property. UDS is an immovable property, but not land.
Venu, once we are telling it is a completely immobile property, then don't you think that we can take that schedule 2, 5B, that it's a totally immobile property and there is no tax at all?
No. Where is it? Exemption is only for land. Land is one of the subset of immobile property.
Okay.
Multiple rights are there. So development right is one aspect of it. UDS is one aspect of it. It is not complete whole. When it is land, it is whole.
Okay. Got it. Yeah.
Okay, I think 9:50. Thank you so much for the opportunity. With this, I'm concluding the discussion for the day. Over to you, Venu.
Great. Great, madam. Any questions by anyone? Okay. Thank you, ma'am. So you brought very interesting points, and it was a very fruitful discussion. I will share the recording and the presentation soon. Thank you, everyone. And only request is everyone to join on time by 7:55. Request to join so that we have a full-fledged discussion. Thank you, everyone.
Thank you. Bye. Good day.
Bye.
Thank you.
Thank you.